but the market's not really shaking this off, and even though safe haven is getting hit. So, with times like this, I want to be there for you. So I took questions yesterday, taking some today. I'll continue this format next week as well, even with Daniel. So sending your questions, frankkerseyresearch.com. Like I said, I'm here for you. It's tough times, but during these times when you see in the market, as bad as it is, even a company I'm looking at, Target, which is a good name, we've had in our portfolio, we're up a lot on. We did not see this coming. Nobody saw this coming because they didn't warn. I'll explain that in a second, why that is significant. But even the places that usually work during times like this that haven't got hit hard, they're starting to get hit hard. So look, we want to be there for you. We want to let you know what to do because times like this are the times that we pick out some of these stocks and pick the right names. They're down 20, 30, 40%. It's one of those times you're going to look back like, 2009 March bottom, the bottom during the COVID crisis in March into April where, holy shit, I wish I bought there. We're getting to that point if you have a 12 to 24 month outlook. Inflation's here. I went over all the risks and everything, but man, looking at where the market is, it's pricing in death. And there are positives in this market. We're seeing the negatives. We know the negatives. We talk about them every day. I'm not going to mention them again with the inflation, all that garbage, with the Fed punch bowl being removed. Maybe I will mention them today and war and stuff like that, and everything going on. But when I see this market and how many stocks have been absolutely murdered, look, we are going to see inflation moderate. There is going to be a shot to buy. It's not going to be, pretty over the next few months, over the next 3 to 6 months, but some of these levels where stocks are trading at could offer you unbelievable returns. Unbelievable returns. I know it's hard to say because you're down your portfolio. I'm down my portfolio, but these are the times and markets that you want to invest in, especially if you have a long-term outlook, because you're investing in everything of something. What we're looking at inflation. It's a major concern. We highlighted that for 2 years of why it was going to be a major concern and why it was going to be like this, just like it was in the 80s and how crazy it is. I didn't think the market would fall as much, but when you're looking at inflation and where it is, that's going to moderate. We're going to see it moderate. I'm going to break that down now, why you're definitely going to see it moderate a lot faster than expected. And that is going to be the catalyst where the Fed hopefully is going to raise rates enough where they start cutting by next year. But investing in some of your favorite names right now, it's going to be a little painful and just picking away. But where these things are trading, they're trading at levels like it's the biggest bear market in the world, ultimate chaos and everything. And what you're seeing is deleveraging. And when you see deleveraging, you see a lot of great names, right? You're like, why is my name that just reported great earnings, why is it down so much? It reported 2 great quarters, it's down 25% like everybody else. It's deleveraging. Okay, people are on margin, and when they're forced to sell or pay their taxes from last year, which they probably did good in the stock market outside of November, December, you're going to sell a lot of the good names. It's forced selling. You're forcing to sell even the good names, and that's why you're seeing a lot of great names, great names. And even after today, it's more like 22, 23% of the S&P 500 is now trading below 10 times forward earnings. And a lot of those companies are paying dividends. A lot of insiders are buying. They're going to see massive buybacks now that they just reported earnings. They're going to stop buying back their stock at these levels. And they are growing earnings, some of those companies. Not all of them, but they're all expected to grow earnings. You'll find some that expect to grow earnings 10% plus. Even the Microsoft and Apples. I mean, maybe they get hit a little bit further here, but there's a lot of names out there that are doing the right thing. They're doing okay, weathering the storm. They shouldn't be down 30, 40%, like so many names we're seeing across technology and in the markets. But anyway, let's get to some of your questions, and I'm going to address a lot of these things I just said now, starting with Josh. And this is Joshua. He goes, hey, Frank. Thanks for all the great coverage on the market and individual names. What are your thoughts on emerging markets? Valuations still lower than the U.S., and they've fallen further. Any interest in investing overseas? Thanks for all the information and teachings you provide. Still wishing I listened to your recommendation to sell some positions in February 2020 and to buy in December 2008. Much thanks, Josh. I mean, you can go over the good calls, and I've had lots of good calls, but this market sell-off, what I'm most pissed about is sounding the warning and sounding that alarm in November, when the Fed did about face and said, guys, this is a fundamental change in the market. A lot of people don't understand what it means when you have an inflationary environment. It's something the Fed can't control. The only way they control it is by taking money out of the system, which is almost forcing a recession. That is the biggest risk in the market. I didn't think that we'd see the NASDAQ fall, and this is just since March, it's down 25%, the NASDAQ. I mean, I didn't think we'd see at this level, even though we'd have trillions down that have to be unwound. And I wish I did. We did sell some positions. I wish I sold a few more. Even Target. Target was a big winner for us, and massive, a great company that we bought right at the bottom of COVID and said, these guys are going to get it done. They're one of the companies that the government selected. Target could be open, Walmart could be open, Home Depot. We had all those, and we sold off a couple of them. Even Costco did very well in all those. Costco and Home Depot we sold a little early, but Target was one of the few that we still had in our portfolio. Right? We sold off Walmart for a game as well, and of course, 25% hurts. We're up a lot in it, but it just shows you how difficult this market is. As for international, I would stay away. I've had some brilliant people come on this podcast, brilliant people I know have been telling me to invest internationally and have gotten destroyed. It just seems like even with times like this, that market gets hit worse. And when you have a growth environment, the U.S. stocks do much better than international stocks. You could find a chart from a time frame that you could bring up and say, Frank, what about from August 1st, 2017 to this part? And you'll say how, stocks in whatever market you're showing me that, outperform. But it just, a lot of these companies in the S&P 500 have a lot of exposure to international, right? Yeah, so you can get China exposure through Yum Brands. There's so many different companies where you can get exposure to Russia through a company. You could see how many companies are cutting their Russia exposure, right? And how many companies have exposure to international markets where you can invest here and be safer and understand these markets much better. They're more liquid instead of investing in a fund. I'm not telling you that it's a bad idea, but listening to so many people tell me, like, Russia was a buy, China was a buy all these years, and they may have been right for a very short period, but getting absolutely freaking wrecked. And when I say wreck, right now, when you look at the markets, guys, everybody's getting wrecked. Unless you short the market, unless you buy inputs in Ginny's newsletter, which she's absolutely freaking killing it. It's 100% winner, like every month that I see her logging in, again, for Money Flow Trader. Which is buying long dated puts on these things. So you see a 20% decline, you're going to make a fortune. And she's seen 30-40% declines in these things. And these positions are going up in a month. They're going up 100%. I mean, it's unbelievable, right? This is what happens when you protect yourself and you provide insurance. Something again that hopefully a lot of you have taken advantage of that newsletter and you're happier than ever. But I know a lot of people just, insurance and hedging and stuff, I get it. It's so easy to go and buy a stock any place. It's even, it's not even that easy to buy crypto sometimes, but it's you're not going to have that mass market when it comes to, some options. Yes. And there's people love to trade options, but man, it's nice to see that newsletter killing it. But getting back to the emerging markets, it's, they underperform. And I've seen these people get absolutely crushed, and trying to listen to them and figuring it out, I'm like, I just don't get it. Why invest over there when you have so many opportunities here? And again, I'm talking about very smart investors, and you have to be smart because you're covering international stocks, and people aren't going to cover that unless they're familiar with our markets and why that's, because you always have to compare and say that's a better market than over here. But the point I was trying to make before is when it comes to these markets, everybody's getting killed right now. Everybody's getting crushed. Everybody understands the risk. Everybody knows what's going on. The problem with international stocks is they got killed when the market absolutely surged. And that was frustrating. And, when you see China coming down, our stocks doing, killing it. When you see Russia getting crushed before the war, even before the war, and, U.S.-based stocks are killing it. It's tough to be a manager of something like that and say, hey, you need exposure to this, and then the opportunity cost, you're getting freaking wrecked. You're getting run over by a truck. Well, right now, you could be like, well, I thought Target was going to work, and it didn't. I thought Walmart was going to work. I thought retailers. I thought, energy stocks. I thought, energy stocks are working right now. It's still working. Energy, one of the few. But when you look at retailers across the board, or if you're looking at healthcare companies that usually do good, right? You're seeing healthcare and that inflation. It's so funny when you look at an inflation chart, guys. If you look, you're seeing like massive inflation in almost everything right now. But when you look at healthcare, it's steady inflation over the past 50 years. Just a constant line going up, 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 up. And the only thing that's worse than that, much, much worse by far, is tuition, which that's a rant for another day because these asshole schools never get blamed for the amount of money they charge and how much control they have over students, not to mention what they're teaching our students these days, which we're finally realizing is crazy. I mean, you talk to any kid that's young and they hate the world, right? They hate America. They think it's the worst country in the world. They hate us. Right? That's what they're teaching us. Not only that, I mean, the rate of inflation for those guys, holy shit, right? Everyone wants to blame everybody else about student debt, and to students, it's the parents' fault for not talking about them. It's whatever. The schools have to have some kind of responsibility here. I mean, the prices that they're charging these fucking kids are a joke, to the point where it's not worth it to go to college. It's not worth it to spend, $200,000. I mean, that's how much it is, $200,000 to go to a Division I school if you're not in state. When all costs are said and done, that's what's going to cost. So you pay $50,000 at least $50,000. I mean, you might get away with $30,000 here, $20,000 here, but it's insane. They just keep going higher. But getting back to the international markets here, and sorry, that is a rant for another day. For me, and doing this for such a long time, the opportunities have always been in the U.S. Will there be a time to buy Russia stocks? Yes, that are trading at a PE of 3. Well, you told me to buy them when they were PE at 15 and our market was trading at 24. You told me to buy them when they were at 10. You told me to buy them at a PE of 5. Now they're at 2, 3. I mean, you're getting wrecked. You're buying cheap stocks with limited growth. And you want to make sure you have that growth potential. You do have some of that growth potential in China, but when China decides to have a zero policy for COVID and all of a sudden, everyone's going to die from COVID, even though we all know the facts and figures now, and most people are going to be okay if they get COVID. Very few deaths, right? We know who it impacts. We know all the statistics, but I still see people driving with masks and fucking cars by themselves. I don't get it, but that's okay. Someone scared the shit out of those people and, whatever. You can thank whoever you want for that. But in China, it's even worse. I mean, for them to go to the zero COVID policy and they still have businesses closed there, right? Japanese survey yesterday, you've seen a lot of these companies, they're saying, oh, well, we're open, and Shanghai, they're not open yet. And that's causing more supply chain concerns, which you're seeing even in these warnings. So for me, the international markets, look, I could be wrong. For me, every time I've tried to invest in these things, I've lost money. And not to the point where I lost money where I put money in and they might have gone up a little bit over time, but if I had them in US-based stocks, I would have significantly outperformed. And that's what you have to look at, because when I have US-based stocks, they go up a lot higher than these international markets. And when the market's like this, a lot of people rush to the US, and those markets get hit a lot harder than they do in the US. So I would stick, even to the S&P 500, the Dow components and things like that. You're probably better off, since even Boeing, all these companies, they especially Dow components, they have a ton of international exposure, yet you have all the regulation, all the numbers that, you could rely on the U.S. So these people got to go to jail if they're not reporting the right numbers or lying about it. Why go international with so much risk? And just from a risk reward standpoint, to me, it's never really been worth it, other than if you're a trader, and sometimes it's never been worth it to actually hold it long term. You put a chart up at the S&P over 10 years, 20 years, 30 years, 40 years, 50 years, compared to almost every single market there. And we've outperformed. And significantly. So again, you could find one little time period that maybe it didn't happen, just like people do with gold sometimes, or even gold's been horrible compared to buying the S&P 500 over whatever time frame. And again, you could pick the 10-year time frame that it worked for gold, 2002 to 2000, whatever, a 10-year period. But overall, for me, I stay away from the international markets because I can get that international exposure here through some of the greatest companies in the world that have much better balance sheets, and that I could actually rely on their financials. So hopefully that helps.